For the last 3 years, Florida insurance costs have been the number one killer for investors. I've watched strong deals just fall apart because of insurance quotes. You see this solid performer get completely shredded after final underwriting comes back much higher than expected. Investors have walked away from otherwise great properties simply because that one line item made the numbers collapse. And it wasn't just the results of the numbers, it was the emotional fear that these insurance hikes created. But something just changed. Governor DeSantis has just announced the largest insurance rate reduction in Florida history. Citizens Insurance, they're reducing their rates by 8.7% statewide. Miami-Dade is already down 13.9%, and Broward is down 14.1%. And these are some of the areas that were having a huge amount of the issues. And when that starts to show that area of such problem is having reductions and solutions are occurring, that's good for the entire state and beyond. Even State Farm, who was not big on Florida insurance, has now filed for a 10% reduction. And since the 2022 reforms, 11 new insurance companies have entered the Florida market. I want to focus on that for a minute. 11 new insurance companies coming into the market is huge because that creates healthy competition, which again offers better services for the insurance policies you get, but also reduction in costs. This is the first meaningful relief we've been seeing after years of relentless premium increases, insurance companies leaving Florida, and it's going to have real implications for investors heading into 2026 and beyond. So for years, insurance has been that silent deal killer. Yep, the taxes rose. Yes, the insurance rates climbed. But insurance, it was that unpredictable factor that just destroyed projections. You'd underwrite a property expecting one number only to receive a final quote back that could be 30 to 60% higher. And having these rates come back so much higher wiped out cash flow, it scared lenders, and it forced aggressive rent increases just to maintain margins. For 3 straight years, the direction was very clear. Premiums were going up, and they were going up fast. Now, for the first time, that direction has shifted for Florida insurance overall, and that direction matters more than just headline numbers. So let's break it down in real terms and go to some of the areas that are the worst hit right now in insurance. If you own a rental in Miami-Dade and your Citizens premium was $10,000 per year, a 13.9% reduction drops that to roughly $8,600, and that's about a $1,400 savings back into your annual cash flow. In Broward County, another area hit really hard by the insurance increases, they're now at a 14.1% reduction, so they're getting similar relief as Miami. On a $12,000 policy, for example, that's nearly $1,700 in annual savings back in your pocket. And even statewide, an 8.7% reduction on an $8,000 premium equals nearly $700 per year. On its own, let's be honest, $700 may not feel transformative, but investors understand this is very compounding. And $700 per property across 10 properties becomes $7,000 annually. Across 20 properties, that's $14,000 per year. And let me tell you, that is meaningful, especially in a high-rate environment where every dollar of net operating income carries more weight. The bigger shift is not just about savings today, it's about underwriting for tomorrow. And in the past few years, the smart investors, well, they've been baking in aggressive insurance escalations into their projections, 5 to 10% annual increases just to stay conservative. And now, for the first time, we can model stabilization instead of automatic increases. That is going to be a large add to people's bottom line if they took this type of precaution. Consider a rental property that's generating $24,000 a year in annual gross income with a $9,000 insurance premium. That's over a third of gross rent going to one expense category. If that premium drops by 10%, that's $900 back in your net operating income per property. And at a 6% cap rate, $900 in additional NOI increases property values by roughly $15,000. That isn't just about monthly cash flow relief there, it directly impacts asset valuation. So Miami-Dade and Broward are seeing the largest immediate reductions, and these areas have been hard hit. There was some of the biggest concerns with these areas, but they still have high rental demand. They still have strong population inflows. And a meaningful insurance reduction in these counties can definitely help improve investor confidence. And I'm also watching the secondary markets closely. There are areas in Central Florida and along certain coastal growth corridors where insurance volatility previously scared capital away. If premiums stabilize in those regions, those markets may become attractive again because these rising insurance costs push many investors inland or out of specific zip codes entirely. Another important factor is competition. Since the 2022 reforms, as I talked about earlier, 11 new insurance companies have entered the Florida market. That's fantastic for competition. Competition, as we know, drives pricing discipline. Over the past few years, Florida insurance companies felt restricted with fewer carriers willing to write policies and limited options for investors. That meant that investors were certainly not in the driver's seats. The few insurance companies were, and the higher premiums, had the investor suffering. Now, just remember, it's important to stay realistic here. Florida insurance is not suddenly cheap, and we're not returning to 2018 price levels. However, the trajectory has definitely changed, and investors respond to trajectory. We are seeing constant drops, and that definitely brings confidence back to the market. Because for years, though, the insurance costs were going aggressively up. Now, that hesitation and that defensive positioning with this one issue, insurance premiums, can definitely help change market factors. So trends are flattening, in many cases reversing. That shift changes investor psychology. Markets move on psychology just as much as math. If you're evaluating a Florida rental property for 2026, be sure to adjust your underwriting thoughtfully. Continue to model conservatively, but you absolutely have to reconsider the assumptions of relentless annual increases and what your starting premium will be. Revisit deals that you passed on maybe a year or so ago and look at them through the insurance lens to see how bad the numbers were dragged down and where they could be at today. And remember, pay attention to county-specific trends, especially if you're here in Florida, because not all markets benefit equally, and not all markets had that huge rise in all insurance premiums. So they might go down less, but they're still more affordable. Most importantly, though, recognize the timing. When negative headlines are dominating, capital retreats. When early signs of relief appear, that's when mass confidence returns and more money goes into the market. If you are thinking about buying anytime over the next few years, you may want to consider looking to purchase within the next 6 months, because when too much mass confidence re-enters the markets, that can put a pressure on already lower inventory levels, especially in the workforce housing affordable markets, because we see, although there are a large amount of properties available in certain segments of the market, like the emotional markets, priced well above the median pricing for areas, that more affordable workforce housing still is in lower supply. Florida continues to experience strong migration trends, steady rental demand, and inventory constraints in many of those lower submarkets. So add insurance stabilization to that equation, and that rental thesis is going to strengthen. And for the first time in years, Florida investors may have a tailwind instead of a headwind on one of their largest expense lines. And to be clear, this is not about celebrating a headline. It's about recalculating your numbers intelligently. Run your numbers again. Stress test the assumptions in insurance. Look at your portfolio and ask this what means for your 2026 strategy. For the properties you already own, this could be a huge adjustment if you're getting lower premiums and looking to move into further properties. This could help make your decision. Most investors will read the announcement and move on. Don't do that. Look at the numbers for properties that you may be looking at to purchase or ones that you already have purchased in your existing portfolio, because smart investors will always adjust their assumptions and their positioning accordingly. So if you want help recalculating your projections and identifying which Florida markets benefit the most from the insurance relief and will actually produce you cash flow, drop the word Florida in the comments or click the link below. Remember, it's the investors who reposition early and see these trends coming. They're the ones who tend to win long term. We'd love to make that happen for you.